Good morning and a very good Friday to everyone today. I hope everyone has a fantastic day. And, just the word Friday is usually a happy sign, right? Let's take a look at the market here. Clearly, we had an ugly, ugly day yesterday with the Dow selling off strongly. And the Dow is really not the biggest problem here. The Dow is actually one of the ones that's in better shape. Holding the trend here, all looks well here. Long term, there is nothing here in the diamonds that suggests we're just going to break all the way down. We're looking pretty good. Extreme volume yesterday, heavy, heavy selling. And I suspect, with the Korean tensions, we could see that struggle to recover today ahead of the weekend. We'll see. Normally, you would expect some kind of a bounce. Normally, after a big sell-off like that, you get some kind of a reversion to the mean, a reactionary bounce, a short-term oversold bounce. That may be a little bit muted today. We'll see how the market actually reacts with the tensions continuing to grow over there in Korea, and his willingness to fire missiles at Guam, certainly raising the threat level and the seriousness of the situation. So it may be difficult for the bulls to just step in ahead of the weekend and buy up this dip like you would normally expect. We'll wait and see. I don't want to predict that, but even if it does occur, even if we do get that reactionary bounce, we could see it be a little bit muted, more so than normal, just because, this weekend. I also would not be at all surprised to see the market close near its lows today. So don't just chase into this and don't try to predict a bottom. Wait for that turn to happen. Wait for that a pattern to show up, and then think about putting on that trade with a well thought out, prepared plan. Okay, let's take a look at the SPY here. Now the SPY, much more damage here. Technically, severe damage. When we look at this long-term trend that's existed, all of 2016 and so far this year, this trend, this is a severe break of that trend. And not only did we slice through some important levels of support, like slicing through this one, we also broke through the 50-day moving average. If I put up the averages here, yesterday we sliced through the 34 EMA and the 50 SMA just like they weren't there. Sliced right on through. And this morning we're indicating a gap lower at the open. Okay, so technically we have created some damage here. Now this can be recovered fairly, if we break the trend and get right back up there, we're okay. This one looks different. This one looks more severe, more like the back of the SPY has been broken. We'll wait and see. There's no reason to panic just yet on the overall, but there is reason for concern. So pay attention. Now, when we look at the Qs, we have a little bit more of a hopeful situation here because the Qs overall, this longer trend is still being held as of this morning. Okay, so even though we have the appearance of what we call, in hit run candlesticks right way options, as the possibility of what looks like a bearish M pattern or a double top, that bearish pattern up here can be recovered clearly if we can hold trend. If we can pull off some kind of a move where we bounce into here and pull right back, hey, great. And we could, wander around in here creating this price wedge, trying to decide if we're going to break out or break down. So there's more hope here in the Qs than I see in the SPY. The SPY's in trouble. and we need a fairly swift recovery there to prevent that from really producing major technical damage. Where here in the Qs, we have an opportunity to catch ourselves at support, and that may help overall the SPY. Now, the Qs also cut right through the 34 and the 50 yesterday. So, and we're gapping down this morning, and we're gapping down potentially below that trend. Okay? So watch that carefully. If the selling continues today, this could get really ugly really fast. So take a breath. Don't panic. Just watch that price action. It will tell us, where the market's going if we just allow it to do so and not try to predict it. Okay, let's take a look at IWM. Now, IWM, just really was never faking it. Never even tried to fake it. After this breakdown of this top up here, we broke out temporarily, acted like we were going to participate with the market, and then broke down. We put in a classic failure pattern if we look at moving averages right here. And let's take a look at it. That failure pattern is called a blue ice failure. And that failure is one of my favorite shorting patterns of all time. I mean, it's the most productive shorting pattern I've ever traded. And that's that failure through the 50-day moving average, a rally back that fails, and then the move to the 200-day moving average. So you can see IWM has already broken down the trend, broken down through the 50 substantially, and is currently testing the 200. And with this gap lower this morning, gives us some major concern. I suspect even with a rally back, and I would almost bet that there's going to be some kind of a rest here or a rally back, we could see IWM seek this bigger level of support right here. Wouldn't be a big stretch to see that happen. Okay, so watch IWM closely. It's certainly not participating in the overall market. Let's take a look at the VIX. I've been talking about the VIX here lately in these videos and suggesting be careful because that really quick pop could occur. And there it is. All through here I was suggesting we're not going back. We haven't been going back down here to test these lows. And we started to catch a little fear here. I said, watch this closely. Be careful. Well, there's that move. And I'm not going to be overly concerned about this move just yet until or if this pulls back and shows us signs of holding that downtrend or a price support in here. If that holds and starts back up, we could be in some serious trouble in this market, and one we're going to want to pay attention to. Look at how long this has existed. If I go to a weekly chart, you can see, and I've got a bunch of markings on here, you can see just how long this downtrend has been in effect. A hold of that trend as support would be not a good sign for the market overall. So volatility has really kicked up here for option traders. That adds some danger to your trading, so be careful if you do decide to trade this. Now I plan to I had a great couple of days with my Qs and Qs put options and diamonds put options, nice profits, and I had already trimmed a significant amount of positions ahead of the sell-off, just kind of wanting to lower my risk to the market, seeing such an imbalance between the diamonds and the rest of the market. So I'm in a really good position, and I see absolutely no need to rush in and trade today ahead of this weekend. As a matter of fact, I plan to sleep well this weekend and not worry about it much because I'm pretty light in my account. Now, the current positions that I do hold, I will continue to manage, and if the market continues to sell off, I may have to deal with those. But for now, I'm I'm okay. Now, on the economic calendar today, we have consumer price index this morning and a couple of Fed speakers to consider. CPI has been weak, and consensus is expecting it to stay weak, actually slipping just a little bit today. So we'll see when that number comes out, if the forecasters were correct. But the fact remains, inflation is not a big issue, and that's really showing up in the CPI. If we take a look, if we take a look at the earnings calendar, it's starting to wind down here. Now, the earnings calendar, there was about 70 or so companies reporting today. They're coming in a pretty rapid this morning, already dropping that number significantly because they've already reported. And we will see that continue. Now, next Monday is a relatively big day for a Monday, a couple hundred companies reporting. And that's really the last of the big days of earnings for this season. So we're finally starting to work through that. Now, one of the bad things about that is the market has been using that as the fuel to move this market. If we run out of fuel, I don't know what's going to happen here. So be really careful, be really cautious, and protect your capital. Make sure you're finding those good entry points, low risk entry points, and trading them correctly so that we're not taking too much risk. And be watchful that this market could continue in this rollover, and not to chase in suspecting that a bounce is about ready to occur. Wait for it to show itself and then get involved. Okay, everyone. Hey, that a little bit longer than normal on this video, but it's important with the way the market has been acting. I hope everyone has a fantastic weekend, a great Friday, fantastic weekend, awesome profits today. If this is the first time you've seen my videos, I do this every single day. That the market is open, I put out a video like this. Please do me a favor, click that subscribe button on YouTube and the follow me button on Facebook so that you can get notified when these are put out every day. Pardon me. And I hope you all find them helpful. Please feel free to drop a comment, and it helps a lot if you just click that thumbs up button. Give me that like button, because that helps those algorithms show this to more people. So I would appreciate that as well. Everyone, take care. Have a great weekend, and I'll talk to you all soon.